Hi, this is Zach Miller. You're listening to Tradestreaming Radio. I'm the author of NewRulesOfInvesting.com and the author of a recent book, Tradestreaming Your Way to Profits, Building a Killer Portfolio in the Age of Social Media. And Tradestreaming Radio is our home in the internet radio space, and we hope to use this forum to expound upon some of our ideas and bring in some interesting people who have ideas of their own that I think you would find quite interesting. I myself am focused on sort of the intersection between online media and investing. And my book, Tradestream Your Way to Profits, outlines 8 strategies that cull from my experiences as a business development person at Seeking Alpha, a hedge fund analyst, and now a independent asset advisor. So we could just jump right into it. So trade streaming as a theory, as a philosophy, is all about finding the most valuable information from the most valuable person with that information, making that available through social media. One of the strategies that I find most appealing from this vantage point is insider trading, right? So trade streaming is finding people who have a strategy that's been proven to work, either academically or in practice, hopefully the marriage of the two. Insiders, we're talking about corporate insiders now, have the ability, have the demonstrated ability to outperform markets over the long term. And I devoted an entire section of my book, an entire chapter, to an insider trading strategy. It's a 2-tiered strategy, and I wrote about it recently on the blog. Check it out there. But I talked about the Musea model, a behavioral model. There was a broker come insider trading strategy guy named George Musea who wrote a book called The Vital Few versus the Trivial Many, Invest with Insiders, Not the Masses. And he attributes outperformance by insiders to a behavioral basis. So he segments insider trading activity by looking at the behavior of insiders and trying to get into their heads to better understand the rationale behind their trades. So therefore, if you were going to implement a strategy based upon Musea, you'd want to focus on who is doing the trading. What Museo calls value insiders, 70% of trades done by insiders with a long-term view of their firm. He also segments out catalytic insiders. These are corporate types not concerned with book value of the firm, but rather they see a temporary anomaly in the pricing of their stock, and they may step in to buy or sell the stock. I found that there was another model, the Sehun model. Najat Sehun, who's a professor of business at University of Michigan, wrote a book called Investment Intelligence from Insider Trading. He creates a bit more detailed model where he creates a hierarchy of insiders, ranking in order of their access to higher quality tradable information. So starting at the top, you have senior management, C-level executives who have their management finger on the pulse of their firms. Though they're not allowed to trade on what's called insider information, which would be private or non-public information that, if made public, would obviously affect the stock price. Definitely, they have a view of their firm. They see sales reports. They know about partnerships that they're working on, and they know better than anyone else about the dynamics of their industry. They're quality players, and when they step in and buy or sell their stock, particularly on the buy side, people should take notice. Then next down you have officers, employees of the firm, not senior enough to make senior decisions, but definitely affect the operating of the company as a whole. You have directors, people who sit on the board of directors but are outside of the firm. They have very little information, right? So they're sitting at quarterly board meetings or something like that. They're not actually part and parcel of the day in, day out inside of a company. And then you have large shareholders. These are hedge fund guys, institutional types who own more than 10% of the stock. So the strategy here is, and you can read the book for more information, but is to focus on active versus passive insider transactions. We want to focus more on the buy side. Particularly corporate insiders sell stock for all types of reasons, particularly in technology stocks. There's options, exercising all the time. And a lot of that's just noise. That's people getting liquid. It's diversifying out of their holdings. The research shows that on the buy side, when somebody steps in with their own hard-earned money and decides to purchase their own company's stock, it's a lot more indicative of future price movements. So we want to focus on buys, not sells. We want to look at clustering and consensus. Insider trading activity is a much better indicator of future movement in the stock price when multiple insiders are buying at the same time. I call that clustering. Without a conflicting trade, that's called consensus. We want to look for 3 or more insiders stepping in and all participating in buying or selling their stock as an indicator. This strategy works better with looking at small caps. We want to mirror corporate insider buying. So less than $1 billion is sort of the sweet spot for this strategy. We want to look for earnings surprises. It's a good idea to look for insider buying activity in firms that recently reported a positive earnings surprise. For some reason, we'll see insider buying as continued momentum play there. And bigger is better. Larger purchases are better signals than smaller ones. We want to look for purchases over 10,000 shares. Obviously, how big the purchase is will also depend upon the price of the stock. So 10,000 shares in a stock that's worth $1 is not necessarily a great signal, but in general, that's we want to see a larger purchase. We want to see corporate insiders putting more money up to show more conviction. So when all these methods improve returns, the 3 most important determinants of quality are, to repeat, top executives. We want to see the C-level executives buying. We want to see them buying in small firms, right? The fact that somebody at 3M is buying is a good thing, but not as good as somebody, a smaller micro cap. And we want to see a big position. We want to see them stepping up. So to quote a research report by Piotrowski and Rulestone entitled, "Do Insider Trades Reflect Superior Knowledge About Future Cash Flow Realizations?" They said, "We find strong evidence that insider trades are associated with the firm's future earnings performance, consistent with insider trading on the basis of both security misevaluation and private information about future cash flows." So, obviously to do this, it's going to take some legwork, right? So, I haven't found a perfect system that mimics the Sehun model. There are some premium sites that allow you to do such a thing. I think Insider Focus is one of them. You can actually theoretically do this through using the SEC database, which is free, Yahoo Finance, which is free, a site called J3SG, which is kind of a funny name, but it's a good site that follows insider activity. They have a free version and a premium version. The premium version actually does a lot of this for you. There's Guru Focus, which a lot of people use. A new blog, which I think is really helpful, called Insider Monkey, which is following a lot of insider movements and expounding upon some of these theories that I'm talking about. Asif Surya has a site called Sin Letter, SIN, that actually does a rundown on insider buying and selling. Finviz, FINVIZ, is a screener that can be used to screen for some of these types of stocks. Insider Cow and Old School Value Insider Buy Screener are some of the resources that I put up there. You can find that all on the blog. I would definitely check out that strategy. That's the insider trading strategy. So